Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, GameStop soars in meme stock flashback as Roaring Kitty reappears, as well as that, the US and China to hold first talks to reduce risk of AI miscalculation. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with GameStop. Now, the price of GameStop shares have now almost doubled since Monday morning. This comes following the social media account named Roaring Kitty posting once again on social media, with this account being the pioneer of the GameStop saga. Now, this really is a new topic for us that we haven't yet covered on this channel, unlike the usual news to do with macro or these key stocks such as Apple, Microsoft and others, which we're always covering. This is kind of more of a niche topic, which of course became something of great significance back in 2021 when, of course, this GameStop saga did take place, where I think many of you will be able to remember back to where we did see, of course, kind of a mass of retail investors, no matter whether you'd never heard of investing before in your life or whether you were an avid retail investor. Everyone was kind of getting involved and getting in on the hype, with GameStop shooting to all-time highs and to record levels, which of course led many hedge funds involved in shorting this asset to, as a result, kind of have to liquidate their position and take large losses, and as a result of that, we've seen a great deal of legal proceedings take place following this kind of this stock situation, and kind of crazy situation really, and yeah, we saw a great deal of a great fallout from that, and we also saw many other stocks and assets impacted by this saga. For example, we saw the likes of AMC, Nokia, BlackBerry, all of those being affected greatly. AMC in particular, which took a rise even as significant as GameStop really. We know that at the moment, AMC has returned, or at least is now driving to new all-time lows. But ultimately, during this GameStop saga, we saw the likes of AMC and others like Nokia really be driven to the upside, as these were key stocks which were heavily shorted. And what Roaring Kitty here, or his official name Keith Gill, noted was that basically these stocks were over shorted, and that as a result of that, these hedge funds positions were open and exposed to price pressures should price rise to the upside, which of course these hedge funds just assumed was impossible. The risk appetite was just insane at the time, and they really weren't expecting something like GameStop during the COVID era to really recover. And so what Keith Gill then saw and posted online was that basically these companies are exposed. They won't be able to hold on to their positions if we push price higher. The actual fundamentals of the stock price is actually not as bad as everyone's making out it to be. So as a result, this is actually fundamentally a good buy value-wise. And if we do buy it in mass, basically we're going to drive up the stock price so much that then the companies are going to have to liquidate their position, which is going to drive the stock price higher. So we're all going to make money in the end. And, that kind of did come true beginning in 2021, when we did see, Wall Street bets jump in on this kind of news and this topic, kind of driving this story to popularity and causing many investors, retail investors, over a period of 4 weeks really, to start increasing their position sizes into GameStop, the stock, as well as others such as AMC. And as a result, once that culminated in an extremely large position held by retail investors, with price being pushed back to previous levels, previous higher levels, ultimately hedge funds started liquidating their positions. This pushed price higher, and the knock-on effect was, of course, price shooting to the upside into the hundreds. Taking it back, of course, we'll cover this on the charts near the end, so make sure you stay around so you see that. But price, the price of GameStop was really, in the hundreds. And I believe around 300 and that kind of thing, which before stock splits and that kind of thing was very, very high. Now, ultimately, GameStop's price has lowered since then. We've seen regulatory proceedings take place. We've seen Keith Gill questioned within courts and that kind of thing with regards to his actions and whether, you know, this was kind of a way to manipulate stock prices and that sort of thing. Of course, many hedge funders were angry at the situation, which of course didn't help Keith. But ultimately, you know, Roaring Kitty kind of moved away into the shadows and nobody really heard from him up until now, of course, which is now when we're starting to see his activity on X, formerly known as Twitter, really reignite. And that, of course, is causing many retail investors, many of these hype investors like those on Wall Street Bets, to start getting back involved with GameStop. And that's why we're now seeing the price of GameStop rise to the upside, with the man behind the social media account named Keith Gill being a well-known day trader whose analysis of GME stock led millions of others to drive the stock price higher and causing hedge funds to liquidate shorts, driving the price even higher. His social media account has been inactive since June 2021 and has now come to life again after a meme was posted on the account. The share price of GME soared 118% in early trading hours on Monday. However, due to new regulations designed to reduce volatility, the gains eased to about 70% by midday. GameStop has become an emblem of the meme stock turmoil when its price rose as much as 2,400% back in the early months of 2021, with Keith Gill's analysis of oversized short positions being held by hedge funds being correct, and the hedge funds which was hurt the most by the GameStop saga was Wildwood Capital, who lost 53% of the fund's value in January 2021 alone. The GME short squeeze also led other shorted stocks such as AMC and BlackBerry to shoot higher as a result of the mass retail investor pressure. The Reddit forum Wall Street Bets, which became infamous after the GME short squeeze, also got involved in the action yesterday after tweeting and replying to Roaring Kitty's Twitter account. Retail flows into GME, however, remain light at only $4.4 million compared to $80 million before back in January of 2021. So still a very interesting topic here, and it'll be interesting to see how things develop over this week, because of course we do have new regulations and limits on volatility, but of course, you know, the hype could be returning. So keep your eyes on GameStop. Next article to talk about, though, is something we've probably covered quite a bit more than we usually than the first article, which of course is to do with the US and China as well as AI. Now, US and Chinese officials will now hold their first meeting on artificial intelligence. This comes following the leaders Joe Biden and Xi Jinping agreeing to discuss such matters back in San Francisco last year, where the summit was held. Of course, this meeting and these discussions is something we've already spoken about before. We've kind of, spoken about how this was expected, how this is kind of a part of the US and Chinese attempts to kind of, mend the issues that have arisen between US and Chinese relations, as of course US and Chinese relations really were driven to an all-time low back in 2022 and kind of never improved throughout 2023. But entering the new year, we've really seen this new kind of push by both the US and China to improve these relations and kind of bring the relations back to a level where communication is a possibility, where these two powers, the two most powerful nations of the world, can kind of speak to one another and understand global issues. And kind of the key global issue at the moment, many could argue, is AI, or at least issue which could become, or at least topic which could become an issue in the future, is of course AI, with it changing the landscape in both workplaces, military, everything. So ultimately, this is a very important topic, and the US and Chinese officials have found a way to kind of host this meeting now in Geneva, so that the two most powerful leaders of the world can discuss issues related to it and discuss governance, international governance especially, and how they're both planning to advance their nations with regards to this topic, to this new technology. So that really is the current situation, it does seem. And this is all obviously coming off the back of last year's, or ending off last year's and starting off this year's conferences held both by the US in San Francisco, for example, and China, which I can't believe where it was exactly within China, but ultimately China did host their own meetings and conventions for US officials, including Biden, as well as, of course, a lot of US CEOs in a bid to kind of improve US business relations as well. So this is a very interesting article on such an important topic, I think, as AI is kind of within this grey zone at the moment where it's not properly regulated nor understood. So looking at the way the world is trying to govern it, especially the two most powerful nations of the world, is so important. With the meeting being between the two leaders being expected to take place in Geneva today. This comes following discussions on the same topic already being had between the US National Security Advisor Jake Sullivan and Chinese Foreign Minister Wang Yi. According to US officials related to the issues, the meeting will focus on risk and safety with an emphasis on advanced AI systems. A key thing to note with regards to the meeting, however, is it is not aimed to achieve any specific outcomes such as any deals or agreements, with the US aiming to just outline their stance on tackling AI risks and offering discussions on the role international governance may play. So, a very interesting article here to cover, and a topic that you should keep on your mind, but also this exact meeting is taking place today, so make sure you look at the results of this and what's actually happened, as I'm sure many articles will come out about the words spoken and any statements made by the two leaders. That's all to talk about on the articles, though. Lots covered there. Next to talk about, of course, is the charts, where we do have quite a bit happening, not so much on the US 30, which we of course are beginning with just as usual, where we are talking about US indices as a whole more broadly, but interestingly, price has now sold off to start off the week. Not that significant of a sell-off, most certainly, but price is selling off, at least currently, and we've almost seen kind of this divergence even form, this very small divergence, and I'll come back to the RSI in just a moment, but on the main charts, we can see price moving to the downside with this large bearish engulfing, taking out any gains made since Thursday evening. So price is now moving to the downside. The question is, though, whether price will make its way all the way down to this 50% Fibonacci retracement level. If I actually adjust this fib, though, it is the kind of 6180, which does seem now more likely for price to interact with and then move back again to the upside from, as ultimately that's what lines up with this key liquidity zone, which dates back to this old area of resistance, which we now expect to act as a strong area of support. Now, in yesterday's weekly market briefing, we kind of did expect somewhat of a hook back, just simply because on the RSI, of course, we were seeing that price was overvalued, overbought, and therefore we were expecting some sort of retracement to take place should price then continue higher. And we did know also on the daily that price has made back a great deal of this retracement, which has now taken place. With price, at the start of the year taking its time, but still pushing to the upside. And then we had this very severe and significant retracement following Jerome Powell's change in rhetoric. And now we've kind of seen, price recover actually quite quickly. So price is certainly in an interesting level at the moment where we could be expecting price to sell off and, return back down to these old lows, because ultimately the macro perspective hasn't changed that much. But at the same time, we're also in this position fundamentally fundamentally, where we know that US indices aren't as affected by, at least these larger US indices aren't affected as much by the macroeconomic situation as other smaller US indices. And so maybe the fundamentals within the stocks making up the indice makes more difference. And so we could definitely be looking at price continuing to the upside and making new highs. But should price do that, we're expecting a retracement first. And that's why this 6180 and key liquidity zone is so important for price to retrace back down to. So keep your eyes on the US 30. Next to talk about though is the dollar, where really there isn't much to say. Starting off the week, prices remained within this range, or at least area of price, which is between this key liquidity level on the upside and key liquidity zone on the downside. So a key area of support and resistance, which is keeping price trapped where it is for now, as ultimately price is lacking momentum at the moment. And really, we're waiting to hear some key news from the US, whether that be the US producer price inflation figure today or Jerome Powell's speech, for price to then react and move either to the upside or downside. So I think those will be the two key data points or news points which will affect price today and either make price break above and break out of this key kind of range and liquidity zone, or break to the downside and continue lower. So keep your eyes on the dollar. Still on top of the dollar though, Euro USD is one to talk about, with price kind of sitting within this upside liquidity level for the moment, this key area of resistance, which has previously acted as an area of support and more recently has acted as an area of resistance, and seemingly at the moment price is reacting to it as though it is an area of resistance. So price is kind of acting in a bearish manner from it. The question will be though whether price then just sells off and moves back down to the this lower level of liquidity, or in fact has price now got the momentum to break above. We know we're receiving a great deal of Eurozone data this week as well. With today alone, we're receiving the German inflation rate figure as well as the Eurozone and German economic sentiment figure. So both those figures are affecting the euro greatly, and so the question will be, of course, whether that kind of data, those figures, will affect price enough for price to shoot above this liquidity zone, or will price stay within this range. So keep your eyes on Euro USD. Next to talk about though is pound yen, which is on the upswing for the moment and is currently rising to the upside. I did say in yesterday's weekly market briefing, I did note how price was rising slowly but ultimately was stalling out, as price was as ultimately the market conditions have been messed up since this volatility, but ultimately price is now continuing this push to the upside and is above the 196 level for the moment and is holding above that level. So it will be interesting to see whether price can stay above that psychological level, and how will price continue to act within this zone. Next to talk about though is Bitcoin, which as a result of the GameStop saga kind of returning seemingly, Bitcoin has found some momentum to the upside. As something that I would also like to reference when we're talking about Bitcoin at the moment, because ultimately a great deal of that kind of Bitcoin upswing and Doge upswing and the meme coins upswing back last year, back in 2021, pardon me, was driven by GameStop. Arguably, with the hype around retail investing kind of playing into cryptocurrencies of the time. So, Bitcoin is something that maybe you should keep on your mind when we're also talking about things like GameStop. Next to talk about though is gold, which is selling off at the moment, and it is kind of on this move back down into this area of liquidity. So price has sold off from those, push from that bullish move last week. So it will be interesting to see whether price does react to this liquidity zone, which is kind of lining up somewhat with this liquidity zone with these Fibonacci levels, but arguably not at the same time. So be wary of these levels and definitely keep your eyes on gold. Lastly to talk about though is oil, which is, there's still not much to say for oil at the moment. Prices sitting kind of within this liquidity zone at the moment that we've previously noted, but nothing too key is happening at the moment. Nonetheless, keep your eyes on oil. Oil's always an interesting asset, especially when we have so much kind of news to do with geopolitics and war within the Middle East, which is affecting oil, of course. That's all to talk about in the charts, though. Lastly, to talk about is the economic calendar, where we are receiving a great deal of very significant data today. So lots to listen out for. Now, firstly, we are receiving the Japanese producer price inflation figure. Followed by that, we're receiving the German inflation rate figure. Followed by that, we're receiving the British unemployment rate figure, as well as the Bank of England's official speech. Followed by that, we're receiving the Eurozone and German economic sentiment figure, as well as the US producer price inflation figure. And lastly, we are receiving Jerome Powell's speech. So it would be interesting to hear from him and learn what's happening inside of Jerome Powell's brain with regards to US foreign monetary policy, not foreign policy. That's all to talk about on the economic calendar, though. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.